Welcome back, everyone, to the Lentil Market Outlook session. This is our final session of the 2020 Pulse and Special Crop Convention. Again, we will begin this session with a presentation and follow that with a panel discussion. And a reminder that you can ask a question of the panelists at any time by using the Q&A function at the bottom of your screen. Our Lentil Market Outlook session is made possible today by WTC Group. WTC Group has been helping Canadian exporters ship simpler since 2002. Okay, let's get things started. I'm going to welcome back Marlene Borsch from Mercantile Consulting Venture to share her market analysis on lentils. Take it away, Marlene.
So I hope you can see my screen properly. And it is certainly my privilege to talk to you about one of my favorite commodities, which are lentils. And again, you know, it's a pulse market, and so we have enjoyed actually some very good markets even over the COVID times. And the big question is if our production holds up and also if the usage is going to stay as good as we have seen it over the last year. So on lentils, again, we'll look at the production outlook. We look at some of the usage parameters in the various countries that are most important to us and try to arrive at a demand and price outlook for the coming year. We will start with the supply side. Being based in Canada, lentils obviously play a big role within the world picture, and we will put it into context there. In terms of the lentil production outlook, you can see again here our estimates for acres, yield, production, supply, exports, and then the resulting carryout. And the mercantile estimates are actually depicted in red, and it gives the various tonnages alongside. And the August 31 StatScan numbers are depicted in white on the right-hand side. We are well aware that there was another forecast a couple of days ago, the model-based forecast, which increased some of those numbers very significantly again. But I'm not so sure, given the feedback we have seen from our growers, if that's not a small overstatement. So we think acres increased by 15%, production up by 28%, which sounds like a very, very big number. But given 1,500 pound yields, and again, you can massage some of these results if you so wish, our supply would actually be down by 2%. So I would say that we are probably more or less unchanged on our supply side, perhaps slightly down. We are using an export assumption for next year of 2.4 million tons. Obviously, that's a very, very important number. And I'll show you some of the thinking behind that. It has to do with some of the Australian crop outlook and some of the destination stocks that we hear about. It's a somewhat conservative forecast if you consider that we exported in excess of 2.8 million tons last year. Given this scenario, ending stocks are actually relatively contained at around 311,000 tons. So talking about carry-in stocks, I wanted to put some data behind this, and you can see here the StatScan stock numbers as they vary through the year. I have circled their number for the ending crop year at 61,000 tons. And that compares with 716,000 tons the previous year and 873 the year before that. Our calculations actually lead us to 51,000 tons. It's only a very small difference, and particularly given that domestic use numbers are often difficult to ascertain. But really the picture shows you how these high stocks in the last 2 or 3 years have actually been diminished very significantly. You cannot talk about lentil markets without refining the numbers by type. I circled on the left-hand side, so I broke them down by the various types, and I circled acres, yield, carry-in, and export numbers, which then shows, which are all having some underlying assumptions to them. Breaking down lentils by type actually was a bit surprising for me because with the overall stock use ratio at 11%, it actually shows a somewhat similar picture for all of these types at the end of the year, given our export assumptions. increasing yields beyond the 1,500 pounds per acre that we have been using will obviously put much more weight on the red lentil side because of occupying about 70% of total acres. So it's going to be a very interesting year moving forward. And already looking at prices, we can see that because red lentil prices actually have moved up over the last 2 days. In terms of production by type, it just gives you a snapshot on this slide, how that visual on how that breaks down. So we're looking at red lentils in excess of 2.1 million tons, about 640,000 of large medium greens and 181,000 of small greens. To put our production into the international context, here is production for the major producers over the last 5 years or so. It shows the relative importance of Canadian production, which would amount to about 48 to 50% this year. So what happens here obviously is very, very important to the markets. In terms of global stocks and total production, the summary thereof is depicted at the bottom. We think they will be up by about 14% this year. And at 6.2 million tons for this year, that is still well below the high number we had in 2016, 2017. I think in the producing countries, we have very, very low stocks carried into the new crop here. There is some question, what about destination stocks in some countries? So with that, we look more closely at the demand side for lentils. And here we also have to think back to J.P. Jarrett's presentation, which said that the path of economic growth could be relatively small. And I think this year, refining demand numbers has been particularly challenging because of that. Major importers of lentils from Canada, it's no secret, India, Turkey, Bangladesh, UAE are some of the major ones. The top three actually represent 50% of total demand. And the next tier would be United Arab Emirates, Colombia, and that leaves about 900,000 for all other buyers on a yearly basis. So this shows you the breakdown of the major destinations using the 1920 actual exports by destination from Canada. You can see India terribly important at 32%. Then we have Turkey at 15%. And then we have Bangladesh, the UAE, about 9% each, Colombia taking 4% of our lentils. So that gives you, again, a visual as to who the most important buyers are on an annual basis. Of course, we have to pause a little bit about India. Indian policies certainly have played a role on all the pulse markets, a very significant one. And I think some of the handling of the minimum support prices, particularly for pigeon peas, black matbee, and mung, have been very important. And I think have actually led to an increased importance of those crops, maybe to the advantage of lentil imports. In terms of quotas, we have been lucky that there have been no quotas on lentils. There have been duties, and you know that effective duties were increased from 11 to 33% just at the beginning of the month. And I think that is an attempt to keep domestic prices on pulses elevated and also to bolster some of the state revenues during COVID times. The overall effect on the lentil trade, as I said earlier, I think we have benefited from the quotas on other import pulses. And so for the coming year, we're using a somewhat conservative export projection for Canadian lentils to India of 600,000 tons. And I say a relatively conservative when I compare them to this past crop year's imports of 907,000 tons that they actually took. With that, some quick thoughts on Turkey. We are using a Turkish production of their own domestic lentils of 375,000 tons. But obviously, Turkey is also an important importer, and we have recovered market share from Kazakhstan over the last couple of years, actually back from Turkey. And we are back to 423,000 tons in the past crop year. And I don't think that Kazakhstan will go back to the high export numbers of 2018, 2019. And we're using about 80,000 tons for Kazakhstan into Turkey for this new crop year. So Turkey remains our important conduit for lentils into the Middle East. And we are using a 400,000 ton number for 2021 for Canadian lentils into Turkey, which would be down slightly from the 1920 number of 420,000 tons. Our thoughts on Bangladesh and the United Arab Emirates both have been quite important to us as well. UAE has become, alongside Bangladesh, the third largest buyer in this past crop year. For the coming year, we're using 225,000 tons in our list of import demand. And for Bangladesh, we're using also a slightly reduced 200,000 tons for the coming year. So that gives us combined exports. And here I want to look at some of the trends and just to actually look at how successful they have been. If you look at a longer time horizon and away from the last 5 or 6 years, maybe. Over the 20-year horizon, Canadian lentil exports combined have increased 4.7-fold, which is really quite amazing. And that, of course, coincides with the growth of the red lentil production in Canada. Even looking at the last 10 years, it has doubled, but we are still down from the peak that we experienced in 2015 of 2.6 million tons. But again, you know, it's been a very successful campaign if you look at some of the longer term trends. If you look at trends by destination, I think the hallmark of lentils has been volatility by destination, and that's definitely true for Turkey and India. But we are seeing a resurgence of buying by those countries and also by UAE and Bangladesh, so that the total demand has been driven up again, as we saw on the previous slide. I also wanted to look at month-to-month comparisons over the last 3 years, and the yellow line depicts exports by month for the 2019-20 year. And you can see that January forward, we really had an unusually successful export campaign with very strong demand September and January onward. We don't see a lot of stocks in producing countries, as I mentioned earlier, some stock building in some of the major buying countries. But again, we expect a somewhat similar pattern for this year with exporting lots of reds actually before Australia comes on stream. And then hopefully again, January forward, also replenishing some of the buying country stocks there. If you're into detail, we have included export projections by country for the coming year. Again, India, Turkey, Bangladesh should take about 50%. India, as I said earlier, there's a question mark. It's a relatively conservative forecast, and obviously also depends on how the economy in India will doing, as Mr. Javed alluded to. And also how COVID will progress in that country and how the weather will allow their crop to develop. In terms of lentil usage, I thought I'd show a breakdown by type of usage, including some of the domestic numbers, because we have been talking about that on the P side. On lentils, exports still take about 85 to 87% of usage. Domestic use is 13 to 15%, which with seed representing 5% and domestic edible demand probably around 2%. There are certainly questions about pet food consumption. I personally think it could be as high as 300,000 to 400,000 tons, so would be slightly underrepresented in my numbers. But obviously that depends on the qualities generated from year to year and also on the strength of the export demand as well. So this brings us to summary. For the lentil side, again, this is a simplified balance sheet here with red representing our numbers. You can see total supply on the left-hand side and then exports, domestic use, and the resulting carryout, which is relatively small for this year, given the big increase in acreage that we have seen for this year. So in terms of the supply outlook, as I said earlier, production should be up about 28% and supply down ever so slightly or even to last year's. Global production also, because of the increases in Canada primarily and in Australia, is ticking up by about 14%. I expect demand to be robust. Again, you know, I'm using the 2.4 million tons for this year, as I just explained, which would be down from the 2.9 million tons this past year. So I think there's a little bit of room there. Ending stocks around 300,000 tons. And the one caveat that I mentioned earlier, perhaps some stocks in some of the import countries that might lead to a smaller start this year. On price outlook, green certainly firm with an up bias, and I think we might be running very tight on stocks come spring, and we have already seen green lentils, for example, move up to $31 for large greens. Red lentils, again, some of the smaller export assumptions I made primarily refer to the red lentils. I don't think they're hugely oversupplied, but we do have some seasonality to come because of a good Australian crop, if they can get it off. And it's certainly a crop that would be more vulnerable than greens this year into the fall. Although I do note that we're seeing 27-cent red lentils again as well, which are really quite good prices given the good yields we have seen this year for that crop. So with that, we'll hand it over to the panel, but I'll certainly be available for questions should you have any to the numbers.
Thank you, Marlena, for that excellent presentation. In fact, excellent back-to-back presentations. You must be having a busy day there. My name is Tanveer Zaidi, and I'm the moderator for the lentils panel. This panel here. For those of you who don't know me, I am from Global Canada Inc. We are a processor and exporter, a global exporter of lentils, peas across the world. The panelists today, let me introduce you to the panelists today. We have Farhan Adam from Marina Commodities and Elise from Simpson Seeds. Elise Simpson-Fraser is a senior vice president with Simpson Seeds, a buyer, processor, marketer, and exporter of specialty crops based out of Moose Jaw, Saskatchewan. Welcome, Elise. Farhan Adam, the chief executive officer of Marina Commodities, which trades and exports pulses from all over the world. Farhan is coming to us today from Toronto. Let's start with Farhan. Farhan, what do you think about the red lentils market scenario here? We had a bump in demand towards the end of the crop year, which seems to have stabilized or ebbed as of now. How do you think the demand will go on as the year progresses?
Thank you, Tanveer. Thank you, CSA, for letting me here. Marlene has done an amazing job on the red lentil presentation, like she's covered quite a bit. In terms of demand coming, India has bought quite a bit of new crop where you see the grower prices going up. There's a lot of boats being filled, a lot of contracts being executed at the moment. Going forward, the duty was a factor where they increased the duty from 11% to 33%. If that duty did not come in, then definitely would have seen a much larger demand coming from India. However, recently, because a lot of cargo arrived into India, there is a lot of supply available, and that all of that cargo is cleared under the lower duty. So we haven't seen that impact of higher duty in Indian market yet. The prices haven't moved up since even though it's 20% increase, we haven't seen any big upside in the local prices. However, the other side is the lemon tour, which is the tour prices are going up. So there's a lot of demand coming on green lentils at the moment, and India is buying that as well. In terms of red lentils into Turkey, we see that there is continuous bids at lower levels every day coming from Turkey, which you can say is around 520, 530 CNF, which is obviously not workable, but they are in the market to buy lentils. Obviously, the Kazakhstan crop has not been as expected, so there is another 100,000 tons shortage over there. The Turkish crop itself, the local prices are pretty high. So yes, there is a slow period in the next maybe a month or two, but outlook looks pretty positive depending on the Australian crop as well.
Question for you on the Kazakhstan. Marlena's presentation showed that the imports into Turkey last year were less or significantly less than the previous year. And how would you see this year as a competing origin for Canada?
Kazakhstan, the last year also produced much less, and this year the production numbers are even lower than last year. So that yes, it is a competing factor, but again, you know, every buyer I speak to in Turkey, they say that we don't know what kind of quality arrives until the container is opened. So the yields are they're widely different. They can yield as good as Canadian, and sometimes they don't even get yields of 50%. So it is a big fact, unknown factor when they buy the Kazakhstan crop. So Kazakhstan, again, this year, the import into Turkey will be much less than what it was in the previous years. So Canadian will have a good chance of getting that share as well.
So it's more of quality trumping the quantity, the whatever may come in, or the reliability of the Canadian lentils.
No, it's not just that. Obviously, price is always a factor, right? So obviously, if they are selling 20% less than Canadians, then obviously we don't stand a chance. But this year, it's a different question altogether. There's not enough quantity available for the Kazakhstan to supply to Turkey.
Switching gears a bit here and moving to Elise. Elise, what do you think about the demand and pricing of green lentils, lairds, and Estons moving through the year? We see that there is some spike at this time because of the demand from India, as Farhan alluded to. And what do you think about the rest of the traditional lairds and Estons markets?
Yeah, well, we're seeing, as you mentioned, some very steady demand. I also think some of the price is related to the fact that we have not seen what I would say the industry normally anticipates harvest pressure. We didn't really see that traditional thing happen this year, mostly because most growers took advantage through the COVID period to empty stocks, mostly back to even the red lentil stocks. More specifically, we saw growers sell stocks that they'd been carrying for 3 to 4 years. So if you kind of think about those things a little bit together, the growers do have the ability to hold and store, and I think that's what we're seeing. And again, I think that's playing a factor in the prices for reds and greens both right now. Going forward, that doesn't really change. Growers are cash rich. This was mentioned yesterday in multiple Outlook panels as well. Coincidentally, in my notes, 30 cents a pound on everything seems to be a grower number that everyone mentioned. Colin mentioned it, or Ali mentioned it in the chickpeas, canary seed today, we talked about 30 cents. Now we're at 30 cents plus on greens, reds, maybe. But I think that's a real sort of price level that a lot of growers are looking for. And they do have the ability to hold this product, and the market will have to come. In terms of demand, I would say it's difficult because it's not traditional. COVID has thrown off the normal patterns. We see some South American countries right now are currently oversupplied, where they would maybe traditionally still be buying some more stuff, but they were overbought during COVID, government programs, school programs. All of these factors are really having quite a different multiple layers that are causing different things in terms of demand. But again, you can't really deny the supply demand. However it may come throughout the year, we're going to be very tight on green stocks, so that should hold prices firm.
So that how about the Estons? What do you think about the Estons?
Eston's the same. I think we saw some initial US pressure right off the hop, but I think again, US growers, look at the global demand, supply demand, and I think they're not willing to sell cheap either. So they're gonna, want more for their commodities as well. And we can't discount major grains. The fact that major grains are paying decent values, and so the farmers can cash flow that way as well. So again, the stock to use ratio on those will be, limited. We're looking at carrying over, maybe 5% or something, 5-6%.
And what do you think would be the impact of let's say product from Russia on the overall market coming into the Middle East, Turkey, that area?
I think little to none. It's not going to be a significant impact this year.
Okay, moving on to the back to Farhan here. What do you think about the Australian origin product? We last year or last crop year back few months back, like maybe 4 or 5 months back, we heard, okay, the Australian crop is done, but then we know that they're still shipping. September also, there are shipping product from there. So obviously there was product available which was getting shipped through the year. Now the new crop does come in November or so. And so what do you think would be the crop size there of the Australian crop?
There has been different numbers that are being played for the new crop, anywhere from 450,000 tons to 550,000 tons. And obviously, we have seen that Australia, there are big swings in numbers. They also don't know what happens because the weather is a very big factor over there. A couple of weeks of dryness and it becomes really dry and the yields drop significantly. So still they are far away. Still a couple of months left before the harvest, but so far the numbers are around anywhere from 450,000 to 500,000 tons, which is not very significantly very high, going when the growers started seeding, the prices started climbing up. And obviously at the numbers that they were selling, like 800, 900 DCT numbers, those numbers, obviously the growers are going to clean up their bins. So yes, there was no crop to be sold, but yes, in the end, they will keep on selling until $900 DCT is a very good return for the growers to empty their bins at that time.
Yes. So, and given that Australian product commands a premium over Canadian, and the transit time is lesser.
That is not the case anymore. Not really. Like this year, I think we have fabulous quality. We will be at par at Australian, or maybe even we might even get some premium at certain places because it again
the current
Australian
quality
crop hasn't come out yet, so we can't comment on that. But our crop is fabulous, so we will be we are at par at least this year.
So this year's crop is going to be much better looking than, and processing wise, yield wise should be much better for splitting as compared to the previous year crops.
So far it looks pretty good. The samples that I've seen, there's nothing wrong with our quality this year.
We also, sorry if I could just jump in variety wise, if you don't mind, Farhan. We're also, just to add to those comments, Canada has started to produce a larger variety, and a lot of the growers in the upswing of COVID last year, they ended up switching out for new seed technology. So that just adds to Farhan's comments about our quality. It's a larger size, it's rounder, it's more conducive to splitting, efficiencies going up. So our farmers are embracing that type of technology, which make us competitive to the Australians, for sure.
Okay, that's great. And that's good news. And Elise, what do you think about the competition from the US green lentils, the rich leaves there? I understand a lot of South American countries and to some extent India as well are buying those because they are significantly cheaper than Laird's. And once, if they're split, it doesn't really matter very much. What, depending on the usage, if they are used as whole, yeah, it's a different thing. But if they are split, it does not matter. People still consume it that way. And in countries like Colombia, if there is a price advantage for rich leaves get shipped as well. How do you think that is impacting or will impact the crop?
Yes,
I mean,
all
the demand
those,
from those
yeah.
countries.
Yeah, all of those things are true. I think it does help to keep Canadian growers in check. But we have such a difference in terms of we can still pay our grower more because we have a currency that helps in that situation to be competitive against US origin. You still have certain markets that with the great quality we have this year in greens as well, they prefer large greens to a rich leaf. So there's still just preference overall in certain markets. Yeah. In terms of the tariffs as well, again, so US is a 55% tariff and we're 33. So yes, a grower price and some of it may be cheaper, but there's a lot of offsetting factors that I think will keep Canadians, fairly competitive. But again, I wouldn't underestimate any grower, whether it's a Canadian grower, US grower, Australian grower. They will hold products and they will wait for higher prices as well, especially with the knowledge that a lot of countries do need product.
Farhan, a question about to you as well about the US origin product. What do you think? US production seems to be higher this year as compared to previous years. How do you think that will impact demand from against the Canadian products? India, yes, there would be duty differential, but other places, how would that impact?
To be honest, I haven't seen the US numbers. I don't know how big they are, but no matter what, still it's a much smaller crop than the Canadians or Australians have, and it really doesn't impact it. And then US mainly, their main business is their food aid tender business. So the growers always get a better price selling their local tenders, and I'm sure the tenders are increasing all around the world. So I don't see US impacting much into the world market in terms of red or green lentils at the moment, at least.
Mm-hmm. So and then question about pricing. We saw during the year, during the 2019 crop year, we saw that the pricing was going down before there was a sudden bump towards the end of the year, in which India bought a lot of product, and as I understand, at the moment they're not buying any significant quantities. But do you expect them to be back in the market at higher duty levels as well? Seeing that despite the duty going up, people were expecting that the local prices will jump up, but they did not. What are your thoughts on that?
The main reason, as I explained earlier as well, is that a lot of cargo has arrived into India, especially at the lower duty levels. There were quite a few bulk vessels that were shipped, and generally speaking, right now also, I think India has bought a significant amount to start off the year with. In my opinion, it can be anywhere from 200 to 250,000 tons. So there's quite a bit on the books, and then the Australian crop is coming. So any buyer would wait and see what the pressure develops in Australia as well. And we are not at $400 CNF levels. We are at $500 to $550 CNF levels. So buyers are quite choosy at this moment as to where to put their bet on. Although the Indian crop, generally speaking, on all the items is much lower than what the government was expecting. The Desi Chana, which is their biggest crop, which drives the markets for all pulses, they were expecting 10 million tons, and now the industry is estimating it's only 7 million tons. So there's a big gap of 3 million tons there. The yellow peas are significantly high. The pigeon peas, which is the replacement tool against the red split lentils, that price is creeping up every day. So it seems like a perfect storm there, but due to all these duty regulations, 33% duty, peas being banned, the chickpea having high duty, so all that, the political factor needs to be gone away for the market to behave as it should.
So finally, from my side, what do you think should be the average price levels, or let's say, what do you think would be the price trend going forward through the crop year now for red lentils?
It all depends on what Australia does. As far as I understand, I think Australia, the lower side of the market is 500 CNF, and if something goes wrong in Australia, then this market is heading much higher. But if everything is normal in Australia, this market is going to be a range around between 510, 520 to 570, 580 for the short term. And it all depends on next year what the Indian crop is, how they plan to seed lentils or not going in their new crop, which is March, April. So we don't know in November, December what their seeding intentions are. But looking at the other pulse crops in India, definitely it seems that lentils would be the least favorite to seed. So we can see a continuous demand coming of lentils going forward as well.
But that's what we were thinking in the current year as well, that the lentils seeding will decrease because of the large carryover last year. Till there was a sudden jump in the demand from India, and there were last minute additions to acreage for red lentils, which is why we are seeing larger production this year.
Right.
Coming to Elise, same thing for you. Where do you see the price levels through the year, through the crop year? Like, considering that demand from India is relatively volatile, there may be tenders, they would buy for that, and then suddenly everything will be quiet, nobody will be buying from India at all. Mm-hmm. Looking at that volatility, what do you think the pricing, where approximately the pricing should be for lairds and STs?
I think it's going to be difficult to push the growers too low, again, because you're dealing with a lot fewer production regions to pull from. Reds, of course, with Australia and Turkey and India still producing, fairly large amounts of red lentils. Greens, you're really looking at Canada and the US as sort of your major production regions. And I don't think our growers will be very supportive of much lower than, I think, some of the limits that we pushed sort of within the last month or so. So I don't think you can see much under $600 a ton on Estons, and probably not much lower than, a 680, 685 on green lentils, large greens.
That's what you think should be
at a very
levels, yeah.
minimum, and it would be very temporary. If anything, there's more upside to the market than downside.
Okay, I'll take a few questions from the audience here. I have a question here which is, can you share your views on red split lentils production and exports? I guess that would be maybe the last question. Farhan, would you like to take that?
So red split lentils?
Red split lentils from Canada. What do you think exports? Would you like to comment on that?
Maybe Elise would be
like exports from.
Yeah, that's a tough one because there's only about a handful of processors in Canada who are dealing in splits, ourselves being one of them. We just see sort of, we're not a large splitting facility, but it's very sort of steady demand, and we're filling more domestic markets. It's not as large of an export market, I would say, for Canada. Some of the lentil splitting is exported, but on limited basis. It's mostly going into repackaging and into value adds such as fractionation and things like that. So pet food grinding, US stuff. So we don't have a whole lot of data specific to that.
With that, I think we have we've run out of time here. I'll hand over to Greg.
Thank you, Tanvir and Elise and Farhan. And once again, thank you to Marlena for kicking things off with an excellent presentation. WTC Group, your sponsorship of this Lentil Outlook session was very much appreciated. That officially brings us to the end of the 2020 Pulse and Special Crop Convention. It's been a great couple of days of learning, and while it's hard to network in this kind of virtual setting, I still hope you felt connected to each other and to this great industry that we have the privilege to be part of. Thanks for participating.